Hi everyone. It looks like the room is starting to fill up, so I'll kick off. My name is Nick Martin, for those of you who I haven't met, and I'm a venture partner with Draper Startup House here in Singapore. Through the Impact Collective program, I've got the opportunity to meet some of you, though we've also extended this to our virtual communities outside the program. For those of you who are not aware of Impact Collective, it's a equity-free accelerator focusing on businesses that are launching impact for profit businesses. And as part of that, we're facilitating the cross-border launch series. Many of you have expressed interest in looking at the opportunities for second or third markets. And one of those, which was very high on the list, was Singapore. We've invited today Daniel Spencer from Sleek. He's the head of business development and partnerships, very well versed in understanding the ins and outs of setting up your company in Singapore. So we thought it'd be great to bring him on and to walk through some of the details that he helps companies with when they come here to Singapore. It is one of those exciting places. In many cases, it's quite a hassle-free process, but still a few complications and tricky corners that you need to navigate. And we hope Daniel can demystify some of that today. Very exciting to have you here, Daniel. So thanks a lot for taking the time.
Yeah, thank you very much, Nick. And thank you to all of you for joining us on a Friday morning. TGIF, we're almost there for the weekend. But the aim for this morning's kind of session is for it to be useful for you. You're attending, there's a reason you're here. So what I might ask is, as the workshop goes on, if you could type in the chat, like who you are, like what's your name, and what's your interest in being here? Are you looking to set up in Singapore? Do you have a particular question that you would like an answer for? In terms of the session this morning, it'll cover two segments. The first will be just giving you a high-level overview of what you need to consider when you look at starting a company in Singapore, and also why there are so many people coming to Singapore. And then the second part will focus on, once you do set up a company in Singapore, what are the things that you need to be aware of in terms of keeping the company compliant? Because Singapore is a fine city, and that means that if you do something wrong, you will get lots of fines. So again, we'll do part one first. I'll stop, and then if there's any questions from anyone, feel free to turn on your mic to ask the question, or you can use the chat function as well. So yeah, kick off, write out who you are and what's your interest in being here in the chat. All right, so part one, starting a new business in Singapore. So starting a company in Singapore is not new. People have been doing it for many, many years. And in terms of Sleek, we set up between 80 to 150 companies in Singapore every month. It's been growing a lot since coronavirus, just because, again, people are looking for destinations which are safe, which are a bit easier to set up, and where there's not a lot of requirements for paper. And so, but the main reason that people come to Singapore, as probably most of you know, is the tax. So you can see there that Singapore has a very attractive tax system that you can use to leverage for tax optimization. So what that means is that there is 0% tax on dividends if you're a shareholder in Singapore. There's no tax on capital gains. So if you set up a company here, you grow it and then you sell it, there's no capital gains tax in Singapore. You also have access to a startup tax exemption scheme. So most of our clients are startups, and for the first 3 years, there's exemption on profit, and we'll get to that in the next slide. And you also have access to more than 50 different double taxation agreements. And so if you are basing your company in Singapore, you have clients within the region, you can very much optimize your operations to send money across different jurisdictions and to leverage that tax. So someone's in the chat to introduce themselves. Thanks, Thomas, for kicking us off. So again, if you're joining us, please feel free to write your name and a bit of reason why you're interested to look at this topic. The last point is that Singapore has an exemption on the small audit scheme. So that means that you don't have to then worry about paying for an additional compliance for your company, which you do in other countries such as India or Hong Kong, where audits are compulsory for all companies. So again, less work and less cost. But other reasons that people look at Singapore is there's a thriving investor community here, lots of accelerators, lots of startups. There's 55,000 startups in Singapore, according to the Economic Development Board. And there's so many networks of startups in different verticals and different industries, helping each other in terms of looking for funding, looking for clients, even just prototyping. So it's a great network. And in Singapore, where I'm based and Nick is based, you've got these different networks of people that are willing to help each other and to share contacts. So it's a great place to be for that. You also got 100% foreign ownership, which is a really attractive incentive for many companies, because particularly for startups, you don't really want to give away any of your company to someone else just because the government says you have to. So for a lot of our clients, they set up here because they can own 100% of their company, even if they're not from Singapore. So no local requirement for Singapore. And then the last point is that there's very straightforward rules and regulations when it comes to intellectual property. You've also got work visas that you can get if you're looking to move to Singapore and live here. So there's the employment pass visa and the EntrePass if you're an entrepreneur. The rules around those and just the requirements are becoming a little bit more strict, just in terms of the climate that we're in at the moment. But still, we set up companies and also apply for visas for our clients, and we're still seeing that lots of people are still getting visas. It's just you need to abide by the requirements that are changing in terms of the climate. You also have pretty straightforward rules when it comes to licensing. So if you're engaged in an activity that might require a license, like import-export or setting up a travel agency or anything to do with financial management, then again, it's quite easy to understand those licenses and to apply for them. Singapore has a centralized license portal called Go Business, where you can log in and with your company business number, you can apply for the licenses. And then the last point is during COVID, we've seen probably the smallest win in terms of a silver lining, is that the corporate banks in Singapore, which traditionally were very adverse to allowing people to set up accounts online, we've now got banks in Singapore that realize that no one can travel here. And so they are now allowing companies, even though you're not in Singapore, to set up a corporate account by doing a call with the bank over a video conference, holding up your passport. And that's been a huge game changer for Singapore as an attractive destination. So those are kind of the high level reasons as to why lots of people are coming here. September actually saw the record number of incorporations ever in Singapore, which was incredible. I think there was more than 4,000 just private limited companies set up in 1 month. And then in terms of the startup tax exemption scheme, you can see that top left, they're the criteria that you would need to apply to be eligible for it. The key one is at least one shareholder of your company. So one owner needs to be an individual and own more than 10% of the shares of the company. So you can see that if your Singapore entity is owned 100% by another company, maybe a mother company in Europe or Australia or the US, then you don't qualify for this scheme. You also don't qualify if it's just a pure investment holding or a special purpose vehicle, because again, it's not really a startup. But if you do qualify, you can see there that for your first $100,000 in profit, you have a 75% tax exemption. And so that means that your effective tax rate is 4.25% for the first $100,000. The next $100,000 is 8.5%. And then Singapore's corporate tax is capped at 17%. And bottom right, if you don't qualify or if you pass those 3 years, you still have partial tax exemptions. But instead of $100,000, it's $10,000. So again, after this workshop, I'm happy to share these slides. So again, you can have them as reference, and also happy to answer or help with any questions. All right, so Singapore is one location, but potentially you might also be looking at other locations within Asia. So in terms of Sleek, we have offices in Singapore and Hong Kong, which are two markets which are growing very fast and quite attractive. But we also compare different countries within the region. So if you're interested in any of those other markets, you can have a look at those resources. And then in terms of Hong Kong, the main difference is that in Singapore, and we'll get to the requirements in the next slide, in Singapore, you need to have a local resident director for your company, which is just a requirement. And in Hong Kong, there's no requirement to have that. So that's a plus for Hong Kong. The negative for Hong Kong, as we mentioned earlier, is you need to do an annual audit, which costs money, which is also sometimes quite complicated. In Singapore, with the small company exemption scheme on audits, you don't need to have one. So that's a benefit. But in terms of tax, and maybe you know this already, Hong Kong is a very popular destination for e-commerce. And the reason is that if you don't have any customers in Hong Kong, you pay no profits tax. Whereas in Singapore, Singapore is based on if you bring your profits back to Singapore, into the jurisdiction of Singapore, into you invoice from your Singapore entity and the money comes into your corporate bank account in Singapore, then you pay tax on that profit, even if your customers were not in Singapore. So again, a different way of looking at it. But Singapore, in terms of just the global climate, is a bit more attractive for many businesses at the moment. So, okay, so you've got a great idea. You're looking to kick off your business. You're looking to build a zip line from the Marina Bay Sands to the Merlion, and you want to start selling tickets. What is the options that you have to do that? The different options you choose will impact these four things: your ability to get tax incentives and grants, your personal liability as a director or a shareholder, and also your ability to borrow money or get investments, and your future scalability. So in terms of Singapore, these are the three most common entity structures that are set up by companies. You've got sole proprietorships, which is common in most countries. You've got legal partnerships, and you've got private limited companies, which are the most popular. So very quickly, sole proprietorships are usually set up by people that just want to start experimenting in business. It's only available to Singapore citizens or permanent residents or entrepreneur holders. But the main thing is there's no separate identity between you and the company. You are the company. So everything is taxed under your personal income tax, and also you are personally liable if something goes wrong. Because it's linked to you, you can't sell the business and you can't hire people. So again, it's really used most commonly by people setting up like hobby e-commerce or even the hawker centers. If you're in Singapore, the ones that are selling, typically that's what you see. So again, used to be able to be set up by foreigners in Singapore, but now the government has said no, we're restricting foreigners to only set up private limited companies. So the second one is also legal partnerships, most commonly used by law firms. Again, it's only available for Singapore citizens, PR and entrepreneurs. And you're also, in this structure, it's also taxable under your personal income tax, and also you are personally liable. Lawyers do this because they can divide the liability between different deals they might be working on, so that all the lawyers who are partners in the firm are not liable for one deal that's being done by these two partners, but this guy's not involved. So again, we see a very particular structure for these types of entities. So we've just had a few more people join us. So if you've just joined, in the chat, feel free to introduce yourself, tell us a little bit about your business and why you're here. What's your interest in this topic? And so the last entity structure, which is the most common and that most foreigners will set up, is the private limited company. So it's 100% foreign ownership is possible, as we mentioned. The shareholders are not personally liable for the debts and losses of the company, so it has a separate identity. And you also have access to grants, incentives, you can hire people, and also it's easy to set up and quick to shut down. So to shut down a company in Singapore is called a strike-off. We do that for companies when maybe they've made an investment and they no longer need an entity, or maybe the business that you've set up doesn't work. The cost to do that is around $500 from our side, and it involves zeroing all the bank accounts and making sure there's no outstanding tax, and also doing a strike-off with ACRA, which is the company regulator. So it takes around 4 months. But again, if you don't plan to use the company anymore, the timeline doesn't really matter because you've just started the strike-off process. All right, so Sleek, I'll introduce very quickly and then we'll jump into the private limited company and how to set one up. So Sleek was founded in May 2017 by 3 entrepreneurs in Singapore. They're all French, which is very surprising because typically the French, they find a problem and they complain about it. They don't really do anything about it. But these 3 decided to give it a crack. And so they set up a company that specialized in helping particularly entrepreneurs and investors and SMEs to navigate the difficulties of setting up a company. So the problem they solve, just like many of you are solving a problem yourselves, is to help people to navigate and to overcome the poor customer experience, which is rife within this industry, which is the legal industry. Low automation, everything previously used to just be paper-based. There's actually no need to sign any paperwork when it comes to setting up a company, because in Singapore since 2011, electronic signatures have been accepted to sign all documents. And then the last point was the inconsistency in price. So in Singapore, there's more than 2,000 companies like us that help set up companies. And every single company has a different price, but essentially everyone is doing the exact same thing. And so the philosophy of the founders was, let's just put the prices on the website, make it super affordable, leverage technology to make it affordable, and take away the biggest obstacle for anyone setting up a company, which is how much is it going to cost me? And am I going to get stung by hidden fees? And so what they did was they've invested into building a platform. And so this is what we've been building for the last 3 years. And the platform is used to help our clients to work faster, to do things simpler, to not overcomplicate things, because in the end, it's not rocket science to set up a company. There's a few requirements. It's the same, irrespective of if you're a startup, an SME, or an investor. And it ultimately to save money. So these are typical clients we've got coming from all over the world. And this is the requirements that you have to set up a company. So as we said, at least one owner of the business. That can be 100% foreign. It can be an individual, or it can be a company. At least $1 paid up capital, and that can be in any currency. It's typically advised when you register your company to set it up with $1. And then as soon as you've incorporated or you've registered and you've got your business number and you've set up the bank account, then you can raise the capital of the company. But it's not recommended to incorporate a company with a lot of paid up capital initially, because there's some cases whereby the banks may decline the bank account opening. And if you don't open a bank account, you have nowhere to put that paid up capital. And so we've had it in the case of a previous company. It was involved in cryptocurrency, and none of the banks wanted to touch it. They didn't want to open a bank account for it, and they'd issued $1 million paid up capital. They then had to go to a law firm to get the capital reduced from the constitution and then to shut down the company. So again, just from that experience, it's always easy to shut down a company with not a lot of money on it, say $1, compared to one with a lot of money after you've incorporated. The third requirement is a company secretary. So this is a mandatory requirement for all companies in Singapore. The role of a company secretary is it's the legal representative of your Singapore company anytime you need to talk to the government. And so in Singapore, the two key bodies that you talk to is ACRA, which is the company regulator where you register your company and you need to report to at different times of the year, and IRAS, which is the company tax office. So the corporate secretary's role, or the company secretary, is to help you prepare the documents, to hold your AGM, to do your annual filings, and then to make any legal changes to the company. The resident director is also a requirement. So as I said, in Hong Kong, there's no requirement for this. In Singapore, it is probably the main requirement, which a lot of companies look to overcome. Because if you don't have anyone in Singapore who's permanent resident, Singapore citizen, or you yourself don't have an entrepass, then you would need to use another local director. And so Sleek and other companies, we provide what's called a nominee director. And a nominee director is a non-executive local director. So in our team, it's one of my colleagues. They're provided just for you to have the company, but the other directors, who can be based anywhere in the world, are the executive directors. And so they're the ones that make the decisions, but at least you've ticked the regulatory box that you have at least one local director. And then the last is an address in Singapore. And so we provide our office address to companies that are looking to set up in Singapore, but they're not based here. Otherwise, if you are based here, you can use your own address if you live in a condo or a HDB. But you just need to consider that, one, your landlord's okay for you to use that address as a business because it becomes public for everyone to see. And the second point is, if you're conducting business from your home, then you also need to apply for a license from either the URA, which is the Urban Redevelopment Authority, which regulates the use of all the buildings in Singapore, particularly residential, or the HDB Authority if you live in a HDB or Housing Development Board accommodation. All right, so this is the last slide before we finish part one of setting up the company. But these are just some other things to share with you that are most commonly thought about for many of our clients that are setting up here. So when you go to set up your company, ideally you've thought of your company name, but it's important to be aware that particular words in a company name in Singapore are restricted. So the word Singapore, if you try and register your company in ACRA, the company regulator, and you put Singapore in your company name, that may be referred, because Singapore wants to make sure that if you are representing Singapore, that your company is not engaged in any activities that can put Singapore's reputation at risk. Other words such as architect or engineer, there also will be referred to the different bodies that govern those types of activities, because again, they want to make sure that you are actually an architect or an engineer or a school, because those are regulated activities. So if you do pick one that might be referred, in our platform, we recommend, hey, you've chosen one that might be referred. If it does get referred, it slows down your incorporation between 14 days and 2 months, just because they take time to look at it, to come back to you, to give you approval. Otherwise, you can just change the name and pick something else if you aren't going to engage in those types of regulated activities. The second point is that every single business needs to pick a code which is linked to your company. And this is called an SSIC activity code. All this is really for statistics purposes for the government to know how many dentists there are, how many consultants, how many travel agents there are in Singapore. But again, just like the company name, some of these codes are restricted. So again, architect, financial funds management. So again, just to be aware that those codes may be referred. So again, the advice for the codes is to pick one that's quite general, that can be really classified for your business activity, because it then allows you to do many different types of activities under the one company. The most common codes that our clients choose is 70201, which is Management Consultancy General, which allows you to do any type of consultancy. Retail sale over the internet, which is e-commerce, or holding company, if it's going to be a holding for another entity in a different country. And so in terms of those codes, it's possible to have two. You would have one that's primary, one that's secondary, or you can just have one. And those codes you can change if your business activity changes as well. So you're not locked in for whatever code you choose. The next point is which end of financial year should you choose? And we'll get to that a bit more in the second part, which is, we talked about that startup tax exemption scheme. So if you're eligible for that, so to get exemption on your profit for the first 3 years, it's recommended that you pick your first financial year to be exactly 12 months. And in Singapore, that's different from many other countries, is you can actually choose your end of financial year. So if we were to incorporate today in October, it's typically recommended that your end of financial year should be September next year, because that'll be exactly 12 months. So you kind of maximize your 12 months and then 12 months and then 12 months of that startup exemption. For strategic reasons, sometimes you might want to align your end of financial year to be December, which is the most common in Europe or other countries. But again, it's up to you to choose the one. But if you chose December, like in 3 months' time, you would have your first financial year 3 months, and then you would have to start to do all your tax after that. So again, it's just something to think about. Do you need any license or permits? So we've touched a bit on that. There's a website where you can go to find out more about them, to apply for them. Different activities are regulated. Where will you open your corporate bank account? So again, you have the options of the traditional banks in Singapore. You also have virtual corporate account providers such as World First or TransferWise, which most of you probably know. They have licenses in Singapore to open an account which you can link to your company and you can use as your corporate account. The main difference between the traditional banks and those virtual corporate account providers is that they differ in terms of their online offering. The traditional banks have a minimum deposit to open the bank account, and the online providers don't have a minimum deposit, so you don't need to put in like $3,000 to get an account, but instead they will charge a transaction fee every time you transfer money. So just a different way of operating. Where will you work from? So lots of co-working spaces in Singapore, lots of offices, but again, as we see with Corona, everyone's working from home. What insurances might you need? So even though you might set up a private limited company and the liability is limited to the bank account, if there's activities that engage or happen that make you personally liable as a director, it's advised to be protected, and insurance is always a good thing to at least look at. So the most common insurances that a lot of our clients take out is personal indemnity insurance or directors and officers insurance. And again, we have resources on our website that go into the kind of some horror stories of why you might need those types of insurances. And then the last point is, what other legal agreements do you need? So I understand that a lot of you are startups. You're looking to raise funds, you're looking to bring on investors. So you may be building instruments such as shareholder agreements or founders agreements, or you might also be trying to attract really high quality staff, but you might not have a lot of money. And so you can entice them to come on board with something like an employee share option plan. These types of legal documents are often tailored to your specific need. And so it's good to work with a good lawyer that can help you to do that, because the worst thing to do is to not get good advice when it comes to the ownership of your company, because that's where disputes come in. And we've seen in the media in Singapore recently, there's a few disputes in the courts for investors that were not given the right to invest in a startup, or founders that never had an agreement that are now fighting against each other in terms of who owns what part of the company. But also, like, we see a lot of sad things in terms of really awesome companies and founders that give away a lot of their company to people. And in the end, there was one client that I was speaking to who only owns 27% of her company, and it's going crazy, but she's given away a lot of her equity to other investors. So again, good to think about, good to get advice from other startups or to speak to a good lawyer. And if you need recommendations for any contacts for any of this, I'm very happy to point you in the direction of who we work with. All right, so that's part one. A lot of information. As I said, I'll share the slides with you all so you can have that as a reference. But I just wanted to pause there and to see if anyone had any questions on any of those points in part one. You can either turn on your sound and just ask a question, or feel free to type in the chat.
I had a question.
Yeah, thanks, Thomas.
So for the name processing time, we went through got something similar to the referred processing with adding Canada into our name, and that was accepted. If we already have gone through that, do we mention that? Do you think that would expedite the naming processing time?
So you've already applied for the name in Canada. It was referred in Canada, but in the end, you were able to get the name used.
Right. Like if we were to throw in, we have a Water Life Systems Canada Inc.
Yep.
We came into Singapore, Water Life Systems Singapore. Do you think they would look at that? Do you think it'd be a big deal?
Look, it is possible to get it. It's just there's the additional delay sometimes for them to review the application. So Singapore doesn't really look at other countries. It only looks at the Singapore side of things. So
Sure. Okay.
Sometimes it gets approved and they don't refer it, but there's a higher chance of it being referred if it's one of those buzzwords which will be triggered an internal referral. So yeah, if you want to go ahead with Singapore, you can put it through, but just be prepared that it might be delayed. The other thing is in Singapore, which is quite unique, is that you can register your company name with ACRA. So that's your company name, but you can trade under a different business name, and you don't actually have to apply for a business name in Singapore like you do in other countries. The key thing though is you don't infringe on anyone else's trademark or patent. But for example, Sleek, we're registered as Sleek Tech Pte Ltd, but we trade under Sleek, and we don't have the trademark on Sleek. And we don't infringe on anyone else's. So if you do register your name, company name, but you want to do something different, then you can do that as long as you put your business number on your invoices and your website, so that people can always trace back to what your actual company is.
Gotcha. Thank you.
Cool. Any other questions I can help with? Cool. Okay, we'll keep going. So keep thinking about that, but happy to answer any questions at the end of this second part. All right, so part two, you've set up a company. What do you need to be aware of? So as I've mentioned a few times, the key bodies are ACRA and IRIS, which are the two ones you need to just be aware of what they do. The failure to meet the deadlines, there will be penalties and fines, just like everything in life. That's mandatory. But the key thing for you as founders or you as the business owners is to just know one key date, and that is your end of financial year, because that dictates all of your deadlines. So the end of financial year you pick at the time of your incorporation, and then you verify in your first director's board resolution. So all the directors say, okay, our end of financial year for this company is going to be this date. From advice from our clients, it's a lot of startups, they just want to register the company. They want to collect that first payment. They just want to start running. And they don't keep good records of accounting. And so what happens down the track is that when they go to raise money, or they look to get a bank loan, or they look to raise funds, the first thing everyone looks at is your finances. And if you haven't kept track of those, then it's a lot harder to do those things quickly. You also, if you don't keep your accounting clean from the very beginning, then it's often you leave it to the last minute, and then you start to miss the deadlines. So the key thing is, even though you might outsource a lot of your accounting to someone like Sleek or anyone else, it's still important that you as the director understand the basics of when things need to happen. Today, just like everything, there's technology that can make your life a lot easier. So we use Xero for all of our clients, which is a cloud accounting software from New Zealand. It integrates into the banks. It's very easy to use. You can send invoices and everything is integrated together. So it reconciles a lot of the transactions automatically. So again, no paperwork. We use it for Sleek. It's great. I can go out for a coffee. I can take some for a beer. I take a picture of the receipt, send it to the Xero system. Don't have to remember about it again. And also take advantage of Singapore's tax system and the double taxation agreements we mentioned earlier. This here is to give you a very high-level overview of just a typical company. So as I said, if we incorporated today, the end of financial year that I would pick, or that we would recommend, is the 30th of September. You can see for your first 12 months of your year, there's actually no tax. It's just you're doing your accounting, you're keeping your bookkeeping, you're buying lots of beers, you're keeping the receipts. And then 3 months after the first end of financial year, you prepare your first tax. And and accounting records, which is called your ECI, or your estimatable chargeable income, your estimated chargeable income. 3 months after that, you hold your annual general meeting, which the corporate secretary helps you to run. That can be done telephonically, or all your shareholders can dial in. You don't have to do that in person anymore. And at that meeting is where the shareholders discuss the company, you look at the profits. The financial statements have to be ready by that meeting and presented to the shareholders. So again, that's another accounting record that needs to be done. And then also at that meeting, you can pay dividends. So you can decide, we've made all this profit, let's pay it out to the shareholders, no tax on dividends if those shareholders are in Singapore. 1 month after your AGM is when you file your annual return to ACRA. And the annual return is made up of your financial statements and a number of other different documents. So again, it's your corporate secretary that helps you to file your annual return. You can see in the bottom right there, if required, XBRL. An XBRL is a specific report that a company needs to compile in Singapore if you have a corporate shareholder. So if one or more companies own your business, even if it's 1%, you need to prepare this type of report. To give you an idea, for us to do that ad hoc, it's about $500. So again, if you don't have any corporate shareholders, it's just individuals, you don't need to prepare this. And then the last thing for your financial year is your income tax return, which is called a Form C or Form CS. Form CS is just a simplified version of Form C, and that's your tax return, which is made up of the base of your ECI, your financial statements, and your corporate tax. So you can see that all of the tax happens in the future for the previous year. So it can get quite confusing because as soon as you hit the 1st of October, then you've started your new financial year, even though you're still doing your tax for your previous financial year. So again, just to kind of show you a visualization, it's a lot easier to see. But as I said, as soon as you know your end of financial year, these deadlines are always the same. And there's very helpful calculators online that you can just put in your date and you can calculate when all your deadlines will be. If you miss those deadlines, so if you're like our typical startups that leave everything to last minute, then you can see that you start to get fines. So if you miss your AGM deadline, it's $300. If you miss lodging your annual return, it's $300. And if you present your financial statements more than 6 months after they're supposed to be due, that's another $300. So for each financial year you miss all the deadlines, it's about $900. There is an option to apply for an extension of time if you're like very close to the deadline and you haven't got your act together. It costs $200 to apply for that. You get an extra 60 days, but typically what we see is people who are very unorganized anyway, they apply for the extension of time and then again, they leave it to the last minute. So they end up paying the $200 for the extension and then they pay the $300 penalty anyway. So you just need to decide whether those 60 days you're actually gonna to do it or not, because it's better just to pay the $300 fine than an extra $200 to prolong the pain. I won't go too much into detail on this. This is more for your records after this, but these are the most common things we see in terms of tax filings. So the key one is the bottom one, like claiming a lot of things as a founder or a director that you shouldn't be claiming. So you can't claim lots of things that are personal in nature, not for the company. Most recently in Singapore, I found out there's 2 different types of number plates, one that starts with G and one that starts with S. So G's are business and S is just personal. So if you're driving an S and you fill up petrol or diesel or fuel and you try and claim that as a deduction, most likelihood it's not going to be approved. And also paying yourself or your family money that shouldn't be paid. This is just to quickly go through, so our services. So Sleek, we offer all the services that a company would need. Our clients just pick from us what they need. The corporate secretary, which is again the legal representative, is based on, the cost is based on a year of how many shareholders the company has. So if you only have one, it's $300 for the whole year. And unlike a lot of other providers, we bundle everything that you would typically need into this package for free. So you can hold your annual general meeting, we do that for free. Doing your annual return, we absorb the $60 fee. And anytime you want to change your name, change the code, add new shares to existing shareholders, that's all free. The only time that the plan would change during the year is if you added another shareholder, then the plan would be prorated at the cost of 2 shareholders, which is $420 if it's 1 shareholder for the rest of the contract. So again, just meant to be transparent, also based on fairness, because the guys who are clients who have 1 shareholder, they typically ask us less questions than the people that have like 30 shareholders that ask us questions every day. So it's really based on the amount of work that we would do rather than just having one blanket rule, which most other companies have in terms of the cost. The way that our clients will contact us and ask us for help is they log into our platform, they go, I want to change my director. You can see there it's free, you can see the time frame. It gets people off email, death by email, and also you can track the change. We file it with the government. You can see there on the left Sleek sign, that's our digital signature, which we use to get you to sign any resolutions, and then we keep it in your company secretary folder. So everything is just easy for you to access. I'm not going to go through this. This is in more detail around what do those different tax things mean. So again, you can have that there for your reference. Accounting and tax-wise, so we are the only company in Singapore that bases our accounting plans based on your expenses every month, rather than the traditional model of an accountant, which is based on the time cost. So what that means is most other accountants in Singapore will ask you, how many transactions do you expect to have every month for your company? The difficulty with that is if you're a startup, sometimes you don't know. You don't know how many clients you're going to have. You don't know if you're going to be paying Shopify or websites or whatever. But you do typically know how much expenses you're going to have in terms of salary, in terms of paying for things. And so the way that our plan works is you pick the plan based on your expenses. It's an annual cost, but we review it every 3 months, and then we prorate it or we deduct it based on what's the actual amount that you're spending in expenses, and we track that using Xero. But the plans include unlimited payroll, they include the software, the bookkeeping, and all of the tax preparations that I mentioned in that graph. And then on the right-hand side, you can see there, if you do have a corporate shareholder, you can add an XBRL for an extra $500. If you're GST registered, you can also add that support. And if you're a group company, so if your Singapore entity owns a number of different entities, that's when you sometimes need to do a consolidation in Singapore. If your group in Singapore, your holding company is a controlling entity. If it's just like a passive investment vehicle and it doesn't actually control, then you don't need to consolidate. But again, we can support with that as well. The bank account, so typically to set up a company is less than a week in Singapore. The time frame is very much based on getting all of the documents from the directors and shareholders to confirm their identities and to check whether they can be directors. This week, we had someone try and set up a company with a stolen Ukrainian passport. So the compliance team check everything. We make sure that people are not being debarred from being directors if they've never done their compliance as a director of another company. But once the company is set up, you have your business number, you get your constitution, you can then in our platform say, okay, I need to open a bank account. There's the traditional banks, there's the local online banks, World First, TransferWise. You can send to the bankers all of your documents for them to review. And then you can set up a call or a meeting with them. And the people that need to be present at the bank meeting are the directors to authorize the account opening. But just like any other bank account, you can put people who are signatories of the account that are not the directors or the shareholders of the company. So those people should just attend the bank meeting and provide the recommended identity documents to the banks in addition to what we send them. Because we work with startups, we've got a lot of partners. So part of my role is going out and hustling and talking to big tech companies or other providers and saying, hey, we've got about 100 clients every month that are setting up companies. They need supports. What can you offer them? So these are some of the partners we have. It's about $30,000 worth of free perks. So Stripe gives all of our clients $10,000 of free processing credits. So Stripe is a payment gateway. If you're doing e-commerce or you're collecting money by credit cards, their first $10,000 of their processing fee is waived. But again, you can see there's lots of different types of partners that we bring on board. On our website, many free information, all tailored to startups. So it's like a 2-3 minute read to just get an understanding. So again, you asked about picking a company name. There's a resource on that. What is this corporate secretary? 5-minute guide to tax. The digital signature that we built for the last 3 years is free for anyone to use, even if you're not our client. So you're very welcome to use that. You just go to our website and at the top it says sign. We released that for free for anyone during COVID, just because businesses had to go online. And so it's just like PandaDoc, HelloSign, except it's our own signature, works on the same method in terms of the audit trail. And you can use that to send documents to anyone, and it's free. So we use that for all of our own documents. So that's really it. The platform that we have, you can access for free. You don't actually pay anything until you take anything from us, but at least you can see the onboarding and see the experience that we provide in terms of the virtual experience. So I'll stop there. A lot of information, but is there any questions for anyone at that point?
Certainly a lot to take in. I mean, Singapore does make it relatively easy compared to others, but there's still a lot to learn. And thank you so much for helping demystify some of the elements of setting up in Singapore, Daniel. I saw one question on the Zoom group chat that is one that's echoed through a couple of other conversations I've had in the last week with some of the founders in the Impact Collective program, who are looking at Singapore as a place to raise capital and then to expand into another market. So is there anything that you've learned from experiences of companies that you've seen or supported through Sleek in terms of any optimizations from the business setup or the tax opportunities that are available, let's say with a company here and maybe launching into a second market in Southeast Asia?
Yeah, so it's very common, as you mentioned. So lots of people set up the company in Singapore to raise funds. It's really important to look at the different countries that you're in compared to Singapore and what the agreement has in place for the double tax. To give you one example, Singapore, no tax on dividends. Indonesia, 20% tax on dividends. But under the Singapore-Indonesia tax agreement, if you send dividends from Singapore back to Indonesia, it's capped at 10%. So it's a very unique example of how that agreement changes the rules when it comes to the tax in Indonesia. But again, you can get a lot of investment in Singapore, and then it's how you move that money between the different entities, how you reconcile that, and also if it is a group, how you keep track of that in terms of the compliance. So in terms of those types of structures, a lot of our clients are doing it. We have good advisors that we connect them to that can help. So again, if you're thinking about doing that, happy to share all of our contacts for you to reach out to. All of our contacts are really engaged in the startup ecosystem, so they don't charge ridiculous fees. They're down to earth. Like our best lawyer that we work with, he turns up to meetings in a t-shirt. But out of all the lawyers that we've referred our clients to, he is the expert in terms of the Singapore Companies Act, and also just a nice guy. Like, it's gone are the days where you have to go to a law firm and feel like you're inferior because you're not wearing a suit. You just want to get good advice, and you want to get friendly advice. So these are the types of people we try and find for our clients. And so, yeah, very happy to connect you guys with them. And also, like, within our client base, we've got more than 3,000 clients now. And every month, as I said, we set up between 100 new clients. So if there's anyone that's in a similar industry to you and you're looking for advice, happy to also see what clients we have in your space and if they might be happy to give you advice from their own experience. I think that's the best way to learn as well.
Fantastic. Let's go to the floor, see if there's any specific questions from the group. Is it possible that you've covered everything that is needed to be known?
I think it's a lot of information, but I see a lot of the questions or the comments around fundraising, like raising funds. So there are a lot of angel networks or VC networks. So again, if that's interesting for you, reach out to me, and I'm happy to show you the list of all of those contacts. And you can go and you can pitch yourself to them. At the end of this year, there's the Singapore FinTech Festival. So there's a lot of accelerators that are looking for startups. So depending on what industry you're in, I'm sure there's networks that I can connect you in to just get plugged into.
Great.
And is the same with the grant opportunities?
Yeah, of course, Thomas. So again, many grants available. Lots of them, though, are limited to companies that have at least 30% local shareholding in Singapore, but there are some that are available for 100% foreign-owned companies. So more than 50 of them. They're quite complicated. So again, happy to share with you the most common ones. And also there's a department in Singapore called the SME Centre, which is a government body. And their role is to just provide free advice on grants and other incentives. So they're the best people to talk to on that. And again, happy to share those contacts.
If you want, Daniel, after the call, if you share with me some of that material that you've collected over the time, I'll share it with the group who came onto the call today, and
Perfect.
I'll copy you into the email. So then if anyone wants to have any specific follow-up, they put your detail even though you shared it here.
Sounds good.
Fantastic. If no other questions, I think we can wrap this one up. You've done a good amount of talking and got a lot covered in the, I'd say, 45 minutes. So thanks so much, Daniel, for your time today on this topic. And for those of you who were looking to join the second session on the Singapore launch stories, we'll be going into another Zoom link in about 15 minutes. So look forward to seeing some of you in the next chat. And thanks again, Daniel.
You're welcome. Have a good Friday, guys.
That was great. Thank you so much.